Hello, today's topic is Tax Cuts and Job Acts. Changes are effective 2018 to 2025, unless otherwise indicated. And this explanation is for individual and ordinary business. First change I want to mention is individual tax rate. 2017 10 to 10. In 2018 and 15%, 12%, and 25, 22, 28, 24, 33, 31. And tax rates changed advantageously. Okay, but the percentage is minor. And big point is standard deduction. Single and married filed separately 6,350 to 12,000, almost double. However, personal and dependent exemption is from 4,050 to 0. Therefore, if you have a lot of dependents, the change is disadvantageous. And if you don't take a standard deduction, you take itemized deduction. And limited deduction for state and local taxes. In 2017, unlimited. However, in 2018, limitation is 10,000. And for married filing separately, 5,000. Home mortgage interest deduction. Interest on up to 1 million of mortgage. Now, it is interest on up to 750,000 of mortgage. And married filing separately, the number is half. And mortgage before 2018 will not be affected. The old system works. Okay, and interest deduction on up to 100,000 of home equity indebtedness. In 2017, deductible, but now this is not deductible. Restriction on casualty and theft loss. We had this deduction, but in 2018, only casualty losses incurred in federally declared disasters and miscellaneous expenses with 2% AGI threshold. We had a deduction in 2017, but most of deductions have been eliminated. And charitable contribution limit of 50% of AGI, now it's 60% of AGI. And phase out rule. In 2017, up to 80% of itemized deduction were cut, but now there's no phase out rule. Okay. This is advantageous change. Bigger child tax credit. Max amount in 2017 1,000 is now 2,000. Refundable max 1,000 is now 1,400. And above the line deduction, alimony. In 2017, payer excludes from gross income, receiver includes in gross income. But after December 31st, 2018, payer includes, gross income receiver excludes in gross income. Moving expense relating to business was deductible, now not deductible. And the domestic production deduction was deductible, now repeated. And business issues. Corporate tax, we had from 15 to 39 graduated rates and flat 35% for personal service corporations. Now, all are flat 21%, including personal service corporation. And corporate alternative minimum tax now repealed. However, individual alternative minimum tax still with us. New deduction for pass-through business income. Individuals will be allowed to deduct 20% of qualified business income from partnership, S corporation, or sole proprietorship, which is not pass-through business. Okay, and this is advantageous. And entertainment. In 2017, 50% deductible, but now not deductible. Meals for convenience for employer, 100% deductible, but now 50% deductible. Commuting transportation, employer could fully deduct, but now employer can't. And net operating loss, carry back 2 years, carry forward 20 years, but now no carry back and carry forward, however, indefinitely. And carryover of net operating loss is limited to 80% of taxable income of the year. So, this is new rule. Section 179, we could 510,000 expense at max, and now it is 1 million, and the phase out is almost also advantageous, 2.03 million to 2.1 million. And this is final page. Gift and estate tax. Basic exclusion changed from 5,490,000 to 11,180,000, almost double. And we had some increase of annual exclusion for gift tax. Affordable Care Act penalty tax in 2019, this will be repealed. Okay, thank you very much. If you have any questions, please contact me.